This is probably the number one AI stock beneficiary of artificial intelligence that you simply have never heard of. This might be one of the craziest runs I've seen a Canadian stock go on. And the interesting part about the company I'm going to be going over today is prior to a few years ago, it was really not a good company. It was one that really wasn't on many people's radars, and for good reason. The company was actually seeing revenues decline, earnings decline. It was going through a very large struggle. But now, if you bought this stock just a few years ago, you're looking at a 10-bagger in terms of total returns. And this is probably why this has been one of the most requested stocks for me to cover in my bull versus bear case series, and that is Celestica. It's not the flashy artificial intelligence stocks you would think of, like, say, an Nvidia, a Taiwan Semiconductor, a Alphabet, a Microsoft. This is a company that truly is in the trenches in terms of data center production, in terms of artificial intelligence super cycle, I guess you would say. And a lot of people now, because of its massive surge in popularity, are wondering if it's still a buy. So I'm going to dive deep into the company today. I'm going to tackle it within 5 minutes. I'm going to give you a bit of an insight as to whether or not I think this is a buy. Now, we have a brand new report down in the description below. It covers the 4 top stocks inside my portfolio right now. You're going to get my allocation size, you're going to get my thesis, you're going to get my risks involved with owning these companies. It's the top 4 positions in my portfolio. This is going to be a continually updated report, and you could grab it in the description absolutely free. It only takes a few seconds. And as always, everybody, like the video, subscribe to the channel, and drop a comment down below. But let's get right into it with Celestica. So what exactly is Celestica? Well, they're a manufacturing company, but they focus on a lot of things that saw a massive boom in the artificial intelligence supercycle. So we're talking about cooling racks for GPUs. We're talking about switches. We're talking about optics modules, server design, things like that. And the thing about Celestica is it not only manufactures these items, but it also designs them. So there is no question the bull case here is artificial intelligence tailwinds. As more data centers come online, there will be more demand for a company like Celestica's products, whether it be the chassis that house the GPUs, we're talking liquid cooling racks, things like that. The company develops these, sells them to the companies that are building out those data centers, and ultimately it should be able to see a continued tailwind from the continued demand for these products. The second element here is margin expansion. The company is becoming much more profitable on the back of this artificial intelligence expansion because it has been able to shed a lot of lower margin, poor contracts. So not only is revenue absolutely soaring in its hardware platform segment, it is also seeing the profitability rise as well. This company does a lot of custom designs and manufacturing, which does make the contracts stickier because when these companies want to make adaptations or develop new products, they're likely going to go back to Celestica to do so. Their hardware platform solution is zero question the main thing that is driving this company, and it just so happens to be one of the most profitable segments of the business. This was a company that really struggled to grow free cash flow at all leading up until about 2023. What happened in 2023? The artificial intelligence boom. And from that point, we're seeing free cash flow at the end of 2022 of around 132 million. That has absolutely exploded to 457 million. And in that time frame, the company's stock price is almost 10x'd. Now the bear case, and this is something you're going to really want to pay attention to if you are an investor in Celestica. For one, I did mention that super cycle in terms of artificial spend. There is a chance that spending could slow down in the future until we see another ramp up in demand from new technology, new products, things like that, that cause these major companies to build out again and improve upon existing infrastructures. Again, we're looking at a 10-bagger in terms of a year and a half here, so it's not reasonable to think that this trajectory can continue. And the second risk here is the fact that the company is heavily concentrated in a select few customers. So it looks like around 10 clients account for 73% of revenue, and I do believe that 2 clients make up more than 40% of this revenue. So if there is a client that decides to leave Celestica, that could have a material impact on revenue overall. This is always something that is often overlooked, and that is client concentration. Now, in the AI space, all these large companies are spending absurd amount of money on the industry. So it's really not that surprising that the bulk of Celestica's revenue and earnings come from sole clients, large concentrations in very few clients. But you have to understand the risks if they were to lose one. And the third and final point here is valuation. Celestica trades at around 53x trailing 12-month free cash flows. We're looking at a 5-year historical average of 9.3, but again, this is irrelevant because prior to the AI boom, Celestica was a very poor company. It did not grow very well. It struggled a lot. So I do believe that the company should be rated much higher than this. I would say that 30x free cash flow relative to the pace they're growing at right now would not be that absurd. But even then, we're looking at 53x. The company is very expensive. We really don't know how much of a drawdown the cycles will be when these companies get their infrastructure up and ready. They don't spend as much in the future because they already have established infrastructure in place. How quickly that becomes outdated, how quickly they need to roll over that infrastructure and buy new stuff is kind of up in the air because it's such a new industry. We just don't know how much these companies are going to be routinely spending when they do ramp up spending. So overall, this is a company that was very poor, that ended up getting some tailwinds in terms of AI infrastructure that benefited substantially, but I do think a lot of it is priced into the company right now. I mean, we're talking about a stock that went from $30 to $200 a share in very short order, and I do believe predicting Celestica's earnings moving forward is going to be quite difficult, and it's not something that I would look to touch at 25x expected earnings and 53x expected free cash flows. If there's no large-scale AI rollout, this company likely is nowhere near what it's trading at today. In fact, it's likely just kind of putting up the mediocre results it had been putting up pre-pandemic. So everybody, hope you liked the video. Head down below, like the video, subscribe to the channel, comment down below, and make sure you head down to the description. Grab my 4 top holdings inside my portfolio right now. I plan to update this document so it will be fresh every time you head down below to the description and grab it. And we'll see you next time for more great Canadian content.